Hi, it's Ty the Real Estate Guy with a video for those of you who are looking to buy or build a home. When the time finally arrives that we can buy a home, most of us need to get a loan from a bank. It's normal, and it's what we're going to talk about in today's video. By the way, if this is your first time seeing me, you'll want to hit the subscribe button below and ring that little bell to stay up to date on the latest real estate tips and trends. This video is going to focus on the most important questions you should ask lenders before you buy a home. So let's get started. When it comes to lenders, there are loads of options out there. These days, it seems like there's an overabundance of loan officers. With so many options, how is one to know what lender they should use? In this video, I'll give you 8 great questions to ask loan officers to help you find the best lender and loan programs for you. Now, before we get to the questions, I should point out that it should be fairly easy to find a good lender. Start your search by asking friends and family if any of them have had a great experience with a lender. You can do this by sending a quick text or by asking on one of your social media outlets. The Facebook neighborhood pages are usually great for this, but be wary. If someone recommends their brother or an aunt or an individual they are related to, I wouldn't just take their word for it. As a matter of fact, just to be sure, do a Google search on anyone that's recommended to you and take a look at their reviews and ratings. Another good person to ask is a realtor. Most real estate agents have their own trusted lender that they refer clients to because that particular lender has proven to be someone they can count on. By the way, if you watch this video to the end, I will give you a tip that will ensure you get the best loan possible, which could save you tens of thousands of dollars over the life of your loan. Before we get to the questions, it's important to understand that there will most likely be multiple loan programs available to you. Most people prefer to go with a conventional loan, but if that doesn't work out, there's always FHA, VA, USDA, rural loans for those of you who live away from the city. There's jumbo loans. You may qualify for down payment assistance. The list goes on. And in the lending industry, things change frequently. Several months ago, I made a popular video called Everything You Need to Know Before You Buy a Home. I recommend watching that video when you're done with this one. I'll put a link below. As you're doing your research, remember that the best lenders will have great customer service. You shouldn't have to wait 24 hours to hear back from them. As a matter of fact, if they don't call you back by the end of the day, I would drop them like a bad habit. Maybe, just maybe, I would make an exception to this rule in times of insane rate drops, natural disasters, or things of that nature. Also, most top loan officers will offer their personal cell phone numbers to you. These days, the loan officer will ask you to fill out an online loan application. Just to warn you, this could easily take longer than an hour. You should also know that the lender is going to ask you for a lot of personal information, and then at the end, when you think you're done, they will most likely ask you for some of it again. You know, things like your bank statement. People often get frustrated during the loan approval process, and I should probably do a video explaining this part of the process, but for now, all I'm going to say is be prepared for that. Once the lender has had time to look at your credit and review your documentation, ask them what your best option is for the loan. My trusted loan advisor will actually send me a breakdown of what the current rate is with the expected closing cost. He'll include multiple options and the applicable cost if I choose to buy down the mortgage rate. My last recommendation before I get to the question is to use a local lender, one you can sit down with and talk to. If you find a local lender that can't find time for you to visit with them face to face, don't waste your time. Okay, let's get rolling. Here are the top 8 questions you should ask lenders. Number 1, what programs would you recommend and why? Tell them what's most important to you. Do you need help with your closing cost, or is getting the best mortgage rate the most important thing? Number 2, what's the mortgage interest rate? Remember that mortgage rates go up and down on a daily basis, and often more than that. You could get a quote in the morning and have a different rate by lunchtime. No one ever knows exactly what mortgage rates will do, but the best lenders will understand what drives rates, and they can usually give you a fairly accurate guess as to if rates are going to go up or down. They can give you recommendations if you should lock your rate right now because they believe rates are going to go up, or if you should wait to lock because rates should be going down. Normally, I don't recommend buying down your rate, and it's important to understand that if you buy down the rate, your closing costs will increase. If you're planning to stay in the home for a long time, it may actually make sense to buy down the rate. If you're not sure, or you think that you'll sell in a few years, it rarely makes sense to buy down your rate. But your lender can provide you with solid numbers to help you decide if a rate buy down is the right decision for you. If you believe rates are trending downward, you can wait and watch. Remember that it is your responsibility to keep an eye on rates, though the best lenders will actually call you and say you should lock now. When you give the lender the go-ahead to lock the rate, you are locked. This can be a good thing or a bad thing because if rates go up, you're safe. But if rates go down further, you can't relock at the new lower rate. Number 3, what are all the costs involved? A good lender will break this down for you. Remember that closing costs are different from your down payment. Down payment is the cash you saved to put down on the home. Closing cost is what the lender is going to charge you to do the loan. Closing costs can vary significantly from lender to lender, and these closing costs will add up to approximately 3% of the home's price. So on a $350,000 home, you can expect to pay about $10,000. I know what you're thinking. Ouch. But it is what it is, and there's not really much you can do about it. Number 4, can I buy down my mortgage rate, and how much is it going to cost? Often, lenders will offer teaser rates. So when you see an advertisement with some crazy low rate, usually that lender is going to use points to buy down the rate, which means your closing costs are going to be higher than if you just gone with the standard rate. Like I mentioned above, I wouldn't select my lender off an advertisement that I saw for some crazy low rate. Go through the process I mentioned earlier. Also, just to help you understand what a point actually is, a point is 1% of the home's price. So on a $350,000 house, 2 points will cost about $7,000, which will buy down your mortgage rate 0.25%. So 1 point equals a rate reduction of 0.125%. If you don't understand, don't worry. Your loan officer can break it down for you on the specific home you're looking to buy. Before you commit to buying your rate down, think to yourself, could I use this money in a better way? It may be more effective to apply the additional $7,000 or whatever it is towards the home. So instead of spending that money to get a lower monthly payment, you'll actually apply it to the purchase of the home, reducing the amount of money you'll need to pay back to the bank. Before I continue, can I ask a quick favor? Will you please give this video a thumbs up? I would appreciate that more than you know, and that thumbs up will help others see that this video is helpful. Thanks. Number 5, how long can I lock my rate? Usually, you can lock your rate at no additional cost for 30 to 60 days. You'll need to pay additional money for anything beyond that. Normally, I would tell you not to pay for an extended rate lock because in most situations, it would be better just to apply that money towards your down payment, reducing the total dollar amount you'll owe to the bank. The only time I'd recommend an extended rate lock is if your lender is sure that rates will be increasing. But you still need to weigh the cost of the extended lock versus the cost of what the new mortgage rate could be. I've often seen people panic and lock in a rate only to see them trickle down before they close on their home. Unfortunately, they spent that money unnecessarily. Ask the loan officer what they would do and if they think you should lock your rate now or wait. Let me remind you that this is just their best guess too, and ultimately, you need to make the decision and live with the consequences. Number 6, what is a realistic time frame to close on the loan? Some lenders are slower than others, but there are other factors to consider. In a crazy market where everyone is refinancing and buying homes, the process is going to take longer than if you're in a stale market. Just ask the loan officer. Usually, this process will take 30 to 60 days, depending on where you live and, like I mentioned earlier, current market conditions. That being said, if for some reason you need to get through the process quickly, most lenders can expedite your loan. Number 7, is the underwriter in-house? To get a final approval, your loan will need to go through underwriting. Usually, an in-house underwriter will be faster and the process will often go smoother. That being said, I've been through this process multiple times and the underwriter is likely to ask you for more documentation. It can be really annoying and frustrating, but you've got to do it. And number 8, will my loan have prepayment penalties? Some loans will actually penalize you for paying off your home early. You want to make sure you do not have a loan like this because even if you're not planning to contribute additional money to your principal right now, you may want to do it in the future. Okay, so here's that piece of advice that I promised to give you that will ensure you get the best deal possible. Are you ready? Once you've spoken to multiple loan officers and asked them the questions I just went over, select the 2 that you feel are the best and go through the full process with both of them. Yes, it will be a little extra work and maybe a lot of extra work, but this one piece of advice could save you tens of thousands of dollars over the life of your loan. To ensure you're getting the best offer from both loan officers, let them know that you are working with a second lender. Once you're fully approved with both loan officers, you can review the 2 approvals side by side and see who gave you the best loan. Then tell the loan officer that came in high that you'll be going with the other lender. That lender may come back to you with a more competitive offer. If he or she does, just be fair and send that new adjusted offer to the loan officer that originally came in with the best deal. Remember that everyone needs to make money and don't take it any further than this. Besides, if you follow this process, the lender you selected is making a lot less than they do on most loans and probably giving you the best deal that they can. Please let me know if you have any other questions. Was there something that stood out to you as being particularly helpful? If you have tips of your own, I would love to hear from you. Please type your remarks below in the comments section. For more great real estate videos, please hit the subscribe button below. Also, you can find me on Instagram at the Real Estate Guy. If you found this information helpful, please give me a thumbs up. And if you know someone that's currently thinking about buying a home, please share this video with them. Thanks for watching, and don't forget to ring that little bell below. It'll make you feel good.